Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, April 14th, 2009. Well, we're seeing a nice little sell-off in the markets today, actually culminating right now with a major move down in one 10-minute candle. And I'm going to go over all the intraday activity on a technical basis. We're going to discuss a little about what we saw this morning with Goldman Sachs earnings getting reported last night. You had some economic data coming out, retail sales and PPI numbers this morning. And I really want to focus right now on current chart patterns and dictate where we could be going the rest of the day, because I think that's what we're all interested in. Where are we going this afternoon? Now, right now, the Dow is lower by about 140 points, the Nasdaq down about 31, and the S&P down about 16 points on the day. Just underneath 2% across the board. Now, the interesting thing is here, folks, is that we finally have volume in this market. Yesterday was the lightest, tied for the lightest day of the year, volume-wise, with January 2nd, 2009. So right there, that tells you there's something up with the move up over the last few days. And that's been a big thing on my book, is that I haven't trusted the move up over the last few days because of that light volume. Having said that, you have to notice that the bank stocks and the financials are overbought. We are seeing profit taking there come in off of Goldman earnings. Now, what happened with Goldman, folks? Well, Goldman basically blew out earnings, but remember the analogy that I've used for days in this video. Wells Fargo on last Thursday, reported that they were going to have great numbers. That blew Wall Street estimates out of the water, causing all these bank stocks to continue their already momentous rally. Basically, what you did was set the bar even higher for every other financial. So Goldman comes out with great earnings, but the fact of the matter is, with the addition of the dilution of their offering, their stock offering that they wanted to, with just $5 billion to pay back TARP, it's just not going to cut it. And Wall Street wanted to see better numbers if it was going to stay the same or move higher. So ultimately, Goldman, fantastic numbers, but just not good enough for Wall Street here. And Goldman's getting slaughtered today, almost down $12 now at 118.50. On Goldman Sachs. Now, looking at the charts, folks, there's some major levels we got to talk about today, and I really want to focus on these because what you're seeing here on my intraday 10-minute SPY chart, which again gives us a good mirror of the S&P 500, is that we absolutely had a nice push on light volume this morning, and then you've seen some good selling coming in here on heavier volume. Notice this big red candle right here. The volume is almost the biggest candle of the day here on the downside. So what you're seeing here initially was the gap down. We did gap lower on the market. Again, we had some economic news this morning at 8:30 a.m. Eastern Time. The PPI data came out and the retail sales. Now, the retail sales actually disappointed Wall Street, and this is the beauty, folks. And I just want to point out something. You're actually starting to break a little lower. We need to follow this candle in this current candle, because if we do break, this could yield a move down towards $84 or a little bit below 84, possibly even the 200 moving average on an intraday basis. But going back to the economic news this morning, the rest of the economic news over the last week, 2 weeks, 3 weeks, 4 weeks, 5 weeks has always been slightly positive. And even if it's been normal or expectations, the market's rallied on it. But all of a sudden today, retail sales, which had been positive, beating expectations the previous 2 months, all of a sudden showed a slight decrease here, lower than expectations. And all of a sudden, the market's starting to get a little worried. Did we get overzealous? Was the rally too big? We've been talking to our premium subscribers about this for the last week. We've been talking to them saying, guys, you got to be taking profits here. You got to be doing the right thing, because we're going to see a fallback in this market. No market runs up 30% off the lows and doesn't have at least a little bit of a correction in this like we're seeing today. So that's the big question, folks. Do we see more downside in the coming days? That's what the premium subscribers of our research center will know tonight, whether or not we're projecting that. They already know our projections, which included today's activity, by the way. So you can already start to see what's going on here, folks. And again, we suggest you come join that research center. Fantastic. Now, what the key is here, guys, watch these levels on the charts. The pink lines or the purple lines straight across, those are straight lines. Anything angled is in yellow. I have my 20 moving average here, my 50 in orange, and my 200 in red down here. Now, what you're seeing here, folks, is check this out. So we saw a gap down in this market, and notice the levels it went to. This was almost one of the most beautiful charting days initially of the day, if not week, we've seen of late, all right? Now, notice the pullback here in the market. See how it pulled all the way back? And look at my levels. And by the way, these are the same levels I had yesterday, the day before on these charts. So they've been there for a long time. And notice how the pullback coincides with the low of yesterday. You have to know that low of yesterday is going to be support. Notice how the first four candles, 3 of the first 4, tag that lower level. In addition, not one candle closes below the yellow trend line here, which is actually taking the lows going all the way back here a ways, all right? So you need to watch that as well. Now, notice how we closed above. That's telling you that the market may have a near-term push up, because if it wasn't going to have a near-term push up, you'd close below the yellow line and possibly even the pink line here on the downside. So you close above, that's telling you may have a rise in the market. The market starts to get bid up beautifully. Where do you go? You go to this yellow line, which you're connecting the low from this point to the lows here, all the way up to the low here, and it coincides with a pierce up on the top line, which is also the 20 moving average, and right through this other pink line. So a lot of resistance here. In addition, notice what this point is, gap fill on the intraday period. Yesterday's low of the day, we basically gap filled right there. That's a major resistance line. You have to know your resistance points. You have to know your price pattern and timing. If you can do that, you'll be an expert trader in no time at all, expert investor, making much wiser decisions than you currently do. If you can put the technicals in your favor, trend line analysis, price pattern, and time, that's all we use. All right, you want to learn them, join the Research Center or take a webinar. That's as simple as that. Now, what you see here, folks, again, gap fill, yellow trend line got pierced. That's a sell signal. What happens to the market? It starts to sell off. Sells all the way off down to this level. Now, what's a good area to know where that level might be? Well, you do see a little bit of a pivot over here. That's something of interest. See how we had a nice move up, and then you pivoted lower into the 20 moving average? So just out of curiosity, let's just take that. You can see you're coming into support there if you want to use that line. And again, you pierce it, you never confirm that move, get right back above. Where do you go? You go to the pink line here, which is also the 50 moving average and the 20 sloping down. Also, interestingly enough, Obama came on TV here to give his economic speech kind of right around that 11:30 to 12 o'clock time frame. Now, we got a bid up into that, then he goes on, and the market starts to sell. Once he's done, the market really starts to sell. He just finished up right here. We were hovering right on this lower yellow line, which is major support, was the support we held this morning. Once that got broken, you know we were going to go all the way down here. You take out the lows of this point, and now you're settling right on this point. Now, this is a major point. Why? I'll show you why. Check this out. This point, this is the exact point we're at right now, which is where we start the yellow line from. But also, see this pink line right here? This is gap window support at 84.25 to 84.30. Now let's look exactly where we currently are. On this line, 84.25, 84.30, right here. So that's telling you we're at gap window support right now. If that breaks, the next level you're looking for is this line here at basically $83.85, and then the 200 moving average is right below at 83.75. So right in this area will be a lot of good support on the downside. If you do break that, then you can actually look for that gap to fill, and I'll show you that gap going all the way back here. That gap could be all the way down to the high point of that would be 83, and then the ultimate gap fill on the chart on the 10-minute would be down to about 82.50 on this chart, 82.60. But ultimately, you want to take one step at a time as a trader or as an investor and focus on the technicals. Every little pattern here developed. Now, why? Well, notice the pattern development here, guys. You gap lower, and off of this, if you use this as a big down candle and you move up, this is actually an in-spirit of bear flag because you never take out the high of that move. What's that telling you? You possibly have another down move coming. You start to fail and fall down. So here's another down move. What type of pattern is this? In-spirit of bear flag again. What does that yield? Drop. In spirit of bear flag, drop again. Now, once you change patterns, you have to know when to change patterns. That's what we teach, again, in the Research Center, which comes with nightly videos up to 30-plus minutes long on technicals of the market and guidance and education. Every month we're posting a technical tactic, hidden gems report. Every night is a daily market report with key levels on gold, oil, the dollar, the S&P 500, and anything else of interest. Just so much pro trader watch list where we talk about what our pro traders are watching at this time to either go long or short, bearish, bullish. That's not necessarily saying what they're in, but it's what they're looking for. You want to know what the traders are thinking. That's the mentality of that watch list, how you have to utilize it. So that's what we're talking about here, folks. What I want to tell you right now is you want to look for pattern development right here on the current chart. Notice how you're trading sideways. This could be another bear flag, or it could switch. We'll have to watch it very closely. Bearish pattern could yield another down move to this level. This is the ultimate level. You're going to see a lot of support right underneath $84, right around 84 would be a lot of support if we got there right at the 200 moving average. Okay, quickly let's look at the 60-minute here. Just note again the major moves on this market. Good fall. This is really what you're seeing here, folks. Gap window right down here. All right, then if you start to break lower, you're probably going easily to this level, which actually coincides with the 200, and that's fascinating. So check this out. Before I leave you, this level right here at the 200 coincides with the 50 moving average on the 60-minute. That's going to be key, guys. Watch that level the rest of the day. We'll talk to you soon. Take care. Come join the Research Center, the intraday stock chat, the webinar, whatever you want. Check us out at inthemoneystocks.com.